Hello everyone, it's Khaled. Welcome to today's daily pitch, 27 of Jan 2026. Okay guys, so in today's episode we will be discussing or analyzing a very important topics that we have been hearing about in the past couple of days, which is mainly related to the Japanese yen, and also of course we will be discussing the dollar index and gold as well. First, let's move to the economic calendar and see what do we have as pre-planned economic events for today, and then we will move to our topics. So looking at the economic calendar, okay, looking at our economic calendar in general, it's calm today. Tomorrow it will be more important. We have the FOMC meeting. We will be discussing this later. As for today, the more important economic data is the consumer confidence in the US, which is expected to increase from 89 to 90 approximately. This could give some strength for the USD in case we see number higher than forecast. Talking about the Japanese yen and the yields in Japan. Well, recently we have been hearing a lot that the yields in Japan has been rising a lot, and it is causing a global concern. Why this is happening? Last week we had the Bank of Japan meeting. The Bank of Japan kept interest rates as expected, and in addition to that, let's see it on the calendar. Okay, I believe it was Friday. Maybe let's see it on Forex Factory. I didn't maybe put it in the filters. Okay, so it was here. The Bank of Japan, the policy rate stayed at 0.75% as expected. But the main thing in Japan going place right now is the conflict between the government and the Bank of Japan. In other words, the fiscal and monetary policy are working opposite to each other. To simplify things, Bank of Japan is looking to increase interest rates. This will give strength for the Japanese yen, while the government is making more stimulus and expecting for the next couple of years as well to pump more money in the market, and this is giving Japanese yen weakness. Since the government is looking to make more stimulus, investors are feeling scared because in Japan, economically speaking, the debt to GDP ratio is very high. Japan has a huge amount of debt, and the government making this stimulus will make the debt even worse. So you as investor or the general investors are requesting higher yields on the long-term bonds. Why this affected the whole world? In general, whenever a yields in a certain country, and specifically talking like a big country, economically speaking like Japan, whenever we see a huge surge in the yields, this is contagious to other countries. So whenever the Japanese yields are moving a lot in a very volatile way and moving higher, this could be contagious. We will see the US yields do the same. We will see the yields in Europe doing the same, and so on. So that's why the US don't want to see these yields moving much higher for several reasons, mainly because this will cause the cost of borrowing higher on the on the consumer in the US. Even the cost of debt, the US has its own debt, so they don't want to see this very large move. And also the Japanese weakness is not the best for the US. Whenever the Japanese yen is moving a lot, is being very weak, this could be indicating that the competition regarding the exports will be in Japan's side. You as investor, if you see the Japanese yen being very weak, you will prefer to buy goods and services from Japan instead from the US. So this is another reason. So what happened? If you heard in the past couple of days something called a rate check. A rate check, it rarely happens, but it does, is when the central banks like the Fed or the Bank of Japan start calling the major banks in their countries and asking about the current yen prices. What does this mean? This is giving the banks a signal that we are looking at this pair, we are watching the current prices, and we could do an intervention anytime. So this signal to the bank that the federal bank or the Bank of Japan could do an intervention. That's why we see a lot of speculators or the bank itself just getting out of the position. This was one of the main things that took place, and that's why here the first part that happened, the Japanese yen moved up after the government, what we said. And later on, let's look at USD JPY. We can see that the Japanese yen showed some strength. Here I'm going to move to the candles, looking at the 4-hour. This sharp and sudden drop took place because of the strength of the Japanese yen, of course, related to what I mentioned, that the rate check took place in the US and in Japan. In general, we're not going to go into too much details. This is what is happening in Japan. That's why we are hearing a lot USD JPY dropping. A lot of people are still speculating and expecting to see an intervention that could take place. We previously knew, I mentioned it in our previous video, we previously knew that the 160 level, 159, 160 level is a warning level. A lot of investors were expecting to see an intervention, but the hardest part and the most critical part is that you will never know when the Japanese government will make an intervention. You will simply find a 1-minute candle dropping hundreds of pips. That's when intervention take place, and of course it will be very late for you in case you were in a position. So I just wanted to give you this small explanation of what's taking place with the Japanese yen and the US as well. Moving back to the general market sentiment. Looking at the US dollar is still dropping, facing some downward pressure. Due mainly to the trade war that is taking place, the US president currently is threatening several countries. Yesterday we heard the threat for Korea as well. Previously they had some as well threatening Canada, telling Canada that in case you're willing to make a deal with China, we will put 100% tariffs. So all of this, the dollar is being used as a weapon. The dollar is being weaponized against other countries. So investors are getting out of the dollar, getting out of the Japanese government, US government bonds. And that's why we are seeing this drop here and this move in the yields up. As for the VIX, we can see the VIX, there is no major movement. It's still around the 16 level. But all of this taking place regarding the Japanese yen, the trade war, the geopolitical tensions, the biggest winner for us is gold and silver. This was my previous analysis on gold and what I was expecting. Of course, gold opened yesterday with a gap up, as I said, due to the geopolitical tensions and trade war tensions that took place during the weekend. That what caused the gold prices to break above the 5,000. We reached 5,100 and currently we are consolidating. So what are the possible scenarios and trade ideas? Keeping in mind that tomorrow we have the FOMC. The expected result of the FOMC is to keep interest rates with no change. What will be more important is the tone that Jerome Powell will be speaking with. But technically speaking, let's have a look at the prices. I will be marking this price. Every time I say I would like to see a correction on gold or slight pullback, and it is slightly happening. Yesterday, I was able to catch one move on gold, which was here. Unfortunately, it was a very fast move and I couldn't even share it, like saying this is a trade idea that I will see. After I started to see several rejections at the 5,100, the price action was most obvious that we will not break. So my second area that I was looking at was here. I was looking at the 5,050. I saw that after price having several consecutive bearish candles, we can see lower low and lower high. We broke below this level. Whenever price did this retest here, the first one, the second one, or in other words, technically speaking, we had a double top here taking place. I just took my entry and my take profit was here. It was something like this. I put at 400. Yes, it was something like this, my entry. It was a very fast. Usually I don't like to take a counter trend entries, but for me, I saw it like it was an obvious entry and it was worth the risk and it played out well. But in generally, fundamentally speaking, gold is still very bullish. I will be monitoring this level once again, the 5,100, and even a little bit higher. I'm going to drag it to the 5,120. In case I see the price action even breaking higher and doing something like the following, I will be monitoring this price movement, keeping in mind that investors are waiting for tomorrow's FOMC in order to have a more clear vision of what could be the Fed's next move. I believe with the all economic data we have, we could see the Fed, of course, they will hold interest rate and they could be slightly hawkish. Why? Because the economic data, the inflation is still relatively high, above the 2% target. The GDP is good, the unemployment data is dropping. So all of this is supporting that the Feds could hold interest rates higher for longer. And as well, if we go to the dollar index, and technically speaking, let's go to the 1 hour. Yes. Looking at the dollar index, even if we are able to dig a little bit lower to the 96 level, in order to break this 96, and it's a very important level that has been holding for some quite time, I believe we need an important fundamental catalyst, a clear dollar weakness, in order to be able to break lower. But for the current week, we could see even if price retested from to the 96, we could be bouncing a little bit higher. And on gold, we could see that even if price movement on gold, as I was saying, digs a little bit higher, we could see some profit taking or slight correction. All of this in case we don't have a new reactive headline. As you can see, several times gold prices is having a gap. We had a gap here, we had a gap here. All this due to sudden headlines. So back to gold. This is the first scenario I would like to see on gold. My next scenario or my next area of interest I would like gold prices to see testing is the following. Down to the 4,880 to 4,900. In case we reach this level and we fail to break, I will be looking something like this. I have this area, so we have the 5,100, the 5,000, and in addition to that, I will be looking at the 4,880 to 4,900. I will keep it simple. I will not put a lot of levels just to have a more clear price action, because to be honest, the price action on gold, although it's bullish, but it's very aggressive. And speaking about aggressive price action, I would like to move quickly over silver. A huge volume and volatility, and this was one of the analysis I wanted to see. This one played out well, but to be honest, I wasn't expecting to see this huge move breaking above the 100, and even at the 100 level, we didn't see any kind of correction or profit-taking move, knowing that the 100 is a very important psychological level. So the momentum on silver is still very, very strong. The volatility is even stronger, and that's why this is what happened yesterday. Let's have a look. I'm going to zoom into the 5-minute chart just to show you how aggressive the price movement was. Yesterday, after silver broke above the 115, reached approximately the 118, in couple of 5-minute candle, we had this huge drop from the 117 to the 102, $15 on silver, a huge drop. So that's why whenever you're trading silver, be very, very careful. Don't just let the FOMO control you. Watch out for the price action. Put some levels. Usually I don't trade silver. I only trade silver like long term. For me, I would like to see if this price level will hold again at the 102, 103. Otherwise, I will not get into silver because it is already very volatile and already at its highest. So guys, I believe that's it for today. I just wanted to give you updates of what's happening, mainly to the Japanese yen, because we are hearing about it everywhere and it's worth to know why it's affecting the whole markets. That's it for me. Thank you for joining and we will see you soon.